Today we are going to analyze the situation with Bitcoin, which is quite ambiguous. If you look at the monthly candles, important support levels have been broken there, and this points downward to new yearly lows. If you look at the weekly candles, Bitcoin has formed a bullish reversal upwards, which favors growth. And if you look at the stock market, which consists of less risky financial instruments, it is trading on the edge of a precipice because there are historical highs, and the market is quite overheated. But we'll talk about that in the next review, which will be dedicated to the S&P 500 index. For now, let's switch to the monthly time frame for Bitcoin. And before we begin, let me remind you that I do my analysis and trading on the Quant Fury platform because here I don't pay any commissions and I can trade thousands of financial instruments from cryptocurrencies to the stock market, forex, commodities, indices, ETF funds, and much more. Join in. QR code on the screen. Monthly candles for Bitcoin. We are looking at the dashed line of the upward trend, which was broken in June 2026. You can see that it was tested in March 2020, and it was drawn based on the lows of December 2018 and November 2022. So this is quite a large global trend line, and we have broken through it. This could mean that the correction in Bitcoin, which began in October 2025 as a multi-month decline, is not just a correction, but a global trend reversal that only occurred in June, and with a fairly high probability. Note that the RSI did not enter the oversold zone, which starts at a value of 30. This also indicates that the downside potential has not been fully realized. Also, if we look at this chart up close, as we did in previous reviews, we will see that the June candle closed below the important level of $58,740. What is this level? First of all, this is the level of the sideways range that we had in the first half of 2024. Notice that we broke through it from below, and then tried many times to go back down, but never succeeded. Secondly, this is the turning point after which Bitcoin made a deep pullback. Let's see where it started from. Well, roughly from the level, here was the maximum, from the level of $65,000 down to around $29,000. After that, it made a false breakout and returned to the same level of $58,740, which was broken downward in June, well, last month. It made a false breakout upward in October 21st. You see that, right? And after that, it went into an even deeper pullback, dropping from $69,000, which at that time was the all-time high, to the level of $15,500. Accordingly, this level is very important. And the fact that we closed June below this level of $58,740 is definitely not in favor of growth. And finally, this is already the third point. The 50-month moving average was broken. And if we look at the history of breaking through this average, you can see that we broke through it in 2022. At that time, the 100-month moving average had not yet formed on this chart. We broke through it again in 2023 in September, and now, having broken through the 50-month moving average, we have every chance to reach the 100-month average, which is around $40,000. Give or take a couple thousand. It could be 42, it could be 38. Again, but roughly in that area. Here we have a red rectangle marked, where I expect Bitcoin to be in a few weeks or a few months. No one can know this for sure, but this is the target zone for a decline. Now let's switch to the weekly candles and see what we observe here. On the weekly candles, keeping all the same markings, we see a rather interesting picture. Look, we broke through the green 50-week moving average from top to bottom, then hovered above the 100-week, which is red, also from top to bottom, then broke through the 200-week moving average the week before last, and last week, not only did we close with a green candle, but we also closed above the 200-week moving average. And what does this in turn suggest? Well, it suggests growth because this is a classic bullish engulfing pattern with a breakout from below through an important level, namely the 200-week moving average. What are the target levels for growth? Well, first of all, it's still that same dashed line. Now, if we switch back to the monthly candles for a moment, as I mentioned in previous reviews, look, we've broken through it, and now within the month we could go back to test it and then continue further down. That's approximately the area of $69,000. Let's go back to the weekly candles and see what other options there are. So, besides testing the dashed line, we could of course also move towards the 50 and 100-week moving averages. Right now they're around the $88,000 mark. Technically, yes, it's quite possible, but we can only talk about that when we see what? when we see that the price has consolidated above the dashed line of the upward trend, which was previously broken from top to bottom. And secondly, that it has absorbed this falling candle around the $74,000 area. This week was the 1st of June, meaning it's a weekly candle. Formally, Bitcoin has now turned upward on the weekly candles, but it has two important resistances, $69,000 and roughly $74,000. So even a rise to the 74,000 area, even a rise to the base of the June candle, where was that? So even there, the same $74,000 does not mean a reversal. We need to engulf the June candle in order to talk about a reversal from the perspective of the global trend. That's it. Nevertheless, the weekly candles are in favor of growth. Now let's look at the daily chart and see what we have here. Let's zoom out the chart and we see the following picture. We can see that Bitcoin has already broken through all the moving averages, tested the 200-day moving average, and now, look, it has already approached the dashed line, but within the daily candles, not the monthly ones. On the monthly chart, it broke through it from top to bottom, and that's it. But it has already come here, but at the same time, it hasn't tested it since about when? On May 26th, the 50-day moving average, it's the green one. This means that, having come very close to it, we could very well see Bitcoin rise to around $65,500, $66,000. And then most likely the movement will continue further downward. Why? Well, because we've already gone to the dashed line, and basically there's no real need to go back to it. But nevertheless, a rise even to around $69,000 is possible, and at that point, there could potentially be a retest of both the 100-day and maybe even the 200-day moving average if it catches up. If we look at it from the perspective of engulfing patterns, the candles from yesterday and the day before formed a bearish reversal, and at the moment they indicate a decline. But considering that we've come quite close to the 50-day moving average, I don't rule out growth into this area. Again, from the perspective of weekly candles, this is growth. From the perspective of monthly candles, this is a decline. From the perspective of daily candles, technically speaking, it's a bearish engulfing pattern, although without updating the local minimum, right? This leans a bit more toward the downside. I recommend waiting for a test of the 50-day moving average, and if it is successfully broken, meaning the daily close is above the 50-day, you can try to go long with a target around 69,000. So your entry should be around 65,500, and the target is 69,000, but definitely with a stop loss. However, if we see that after testing the 50-day moving average, Bitcoin pulls back and also closes the daily candle with a red body, then it is highly likely that it will go down to update the yearly lows. That's all I can say at the moment. The situation is quite complicated, but there are two things that can be added. First, the stock market has really climbed very high, it's in a very overheated state, and it could drop at any moment. This is essentially the biggest threat to Bitcoin. And second, we did a review on the Quant Fury platform. Please join our community. Here you don't pay any commissions and you can trade thousands of financial instruments at spot prices. Goodbye. The next review will be about the S&P 500 index.